All right, RLT. It is what day is it? Oh, it's Wednesday. It's usually I'm not on a Wednesday, right? Usually I'm like Thursday, Friday. But anyway, we're talking Wednesday, it's January 10th. So 4 o'clock, right? So trading day's over, but what we're going to do is we are going to dig into some analyzing price action and volume, and just my regular thing that I like to do. I understand, Ricky. I don't did anybody here in the room? Did anybody get into that trade, that ES trade with Ricky? Go ahead and post it in the chat. I'm just curious if anybody was able to catch that with him. And let me see who. Just scrolling through the names here. There's Friday. There were a couple of new people here with ROT. So just give me a one in the chat real quick. I'm curious. Is there anybody here right now who is brand new to real life trading? Frank, got it. Cool. And Frank, are you new this week? Okay, good. Excellent. Okay. And look, and I'm going to ask, but you don't have to answer. Okay. So if you're not comfortable, I'm just curious, just your experience trading. Are you new trader, developing, experienced? Just kind of curious what your level of trading is. And if you're not comfortable answering, that's fine too. Just say, rather not say. New trade. Oh, awesome. Okay. Good deal. Well, I'll be a part of that course next that you're going to be taking for the next 90 days. That's great. I think you're going to get a huge amount out of it. Especially if you're new to trading. It's a great course just to get into it and give you a really good foundation for your trading journey. So, okay. So let's jump into it. I want to show you, I want to look at Square today. All right, so give me a second. Need to pull back the chat again. All right, give me a one real quick in the chat if you can see my screen of Square. Just make sure you are looking at the same thing I'm looking at. I just making sure you. Okay, Ricky, thank you. Ricky's answering. I was like, okay, is anybody out there? Okay, so all right, so we're looking at Square. Good, thank you, Ricky. Okay, so here's what I want to dive into today. So and Frank, since you're new, right, this is going to be, I think, hugely helpful for you, because the reality, Frank, is, and I'm going to address a lot of this to you because you're new to real life trading and you're also new to trading in general. So the reality is that you only need two things to trade, right? You need price action and volume. So I do these sessions where I focus on just analyzing price action and volume and some of the things you can look for. Some of the things I look for specifically when I am looking to take a trade and looking for opportunities to go long, go short. Now, what I'm going to share with you, these are not my only trading strategies, but these are some of my most profitable. So whenever you're looking, whenever I'm looking for a trade, but I would recommend anybody, whenever you're looking for a trade, you're looking for those trades with the greatest probabilities of success, right? And I always will look at things and I'll grade them on, like, is it an A setup, a B setup, C, so forth. And ideally, I want to be taking my A's and B's, right? Those are really going to be the ones that I think are going to give me the greatest probability of success. So what I want to share with you for today on Square is we look at what happened today, market wise, right? In terms of the day, right? We kind of open up in the middle of yesterday's price action, right? So I mean, technically, yeah, we gapped up over the close, but we didn't gap up over the candle. So it was an inside day to start. And then this is a 3-minute chart. So here's the daily chart over here to the right. Here's the 3-minute chart over here to the left. And so what we're looking at is, Square opened and it just sold off, right? Selling off hard. And when I look back at what the market was doing and I'm looking actually on a different chart here, it's like, yeah, okay, the market opened, the broader markets, the S&P and the ES, they opened and they sold off initially, but then they bounced and it was a really nice bounce off the lows, and then it just ran all day long. So what I'm looking for is when I'm looking for a setup, I am not just watching the individual tickers like Square, which we're looking at here, but I'm also watching the broader market to see, just to give me an indication, are we at a position, at a place where I think there could be a balance? So what I'm looking for is when I'm looking at these setups, and specifically what I'm looking for, and sometimes you'll see these on a 3-minute, and I'm going to jump to a 5-minute here in a second. But what I'm looking for is some type of indication, especially when you get this hard of a sell off, right? You do expect a bounce. And so you don't know exactly when that's going to happen, but there are indications, right? There are things that you can look for that will give you an idea that, that there might be an opportunity for bounce. Now, all the more reason why I'm a huge proponent of using the multi-time frame analysis. So I'm looking at, like when the market opens, I've got a 3-minute chart, I've got a 5-minute chart. Um, Certainly after the first 15 minutes, I'm also then referencing the 15-minute chart. And then as the day goes on, I'm going to be looking at the 30-minute and the 1 hour. So the reason for that is you'll see setups on the larger time frames that you might not necessarily see on the 3-minute, and vice versa, right? So if I see a setup on a 3-minute, I want to be looking at the higher time frames to see if they're in agreement, right? Do I see the same setups on a 5-minute chart, 15-minute chart, et cetera, that I see on a 3-minute chart? And if I do, then that's good, right? It's an extra box that I can check off that, hey, this looks like a pretty good trade because the time frames are all in alignment. So what I'm looking for here is some area of a bounce. But specifically what I'm looking for is excuse me, I'm looking for hammers at the bottom of a move, right? A hammer candle at the bottom or a shooting star at the top of a move, right? So over here, now this is, would be technically the shape of like a shooting star right here. And this would be the shape of the hammer candle right here. For those of you who are, especially Frank, who's new to trading. So if I'm looking to go short at the very top of a move, I'm going to be looking for a inverted hammer, a shooting star, or at the bottom of the move, I'm going to be looking for a hammer candle. But what's critical about that is not just seeing the candle itself, but I'm looking specifically for a volume spike associated with it. Now, this is going to look too clear here on the 5-minute chart because it came down here and there's no hammer, right? You don't see the hammer candle here. You don't see what I'm looking for, and you don't really notice a huge, volume spike. But if I go to a different time frame here, and this is why I like to have multiple time frames open. If you go here into the 5-minute chart, right? What do you have? 3-minute chart didn't show this. 5-minute chart, you have a great looking hammer candle, right? And look at the volume spike. So when I say volume spike, right, what I'm looking for is I'm going to be looking left. And usually what you'll notice is more of a drop off of the volume, and then you'll see this volume spike, but you were getting volume spikes on the way down here. And that's also important because you can analyze the candles and the volume just to understand the sentiment of what's happening, right? So let's just look here. So in this candle here, right, this candle had some pretty big volume. Now, you also have to remember, you always have to anticipate the greatest volume, especially in the first 30 minutes of the market. the greatest amount of volume on the first candle. It just is always that way. You're going to get huge amount of volume on the very first candle because of all the overnight settlements and everything else. So, you know, the volume on the first candle, I don't really pay that much attention to. It's what happens after that. But if you look here, right, first candle here, volume, then the volume dropped off on the second candle, but then it picked up again, right? Volume picks up and you get this bearish candle here, right? So pretty good body on it. But then you also do have, you got to pay attention to these upper wicks and the lower wicks. And what do those represent? Well, the upper wick here is representing selling pressure, bottom wick representing buying pressure. Well, this candle is fairly, it's a red candle, right? So we can agree that that is a bearish candle just by nature because it's red. Or if you're using TradingView and you're using white and black, it's black, right? So you look at this and you go, okay, here's the body of the candle. It's a decent body. Yeah, there's a little bit of, there's some, you know, buying pressure. There's some selling pressure. And then you get to, so that's that volume. Then you get to this next candle here, right? So again, it's a bearish candle technically because it's red. But this candle is more bearish. I mean, I'm sorry, more bullish than this candle, right? And you go, well, why is that? They're both bearish. They're both bear candles. True. But look at the difference in the lower wick here, right? Upper wick here and here is about the same. So the selling pressure at the top is about the same. But look at the bottom wick here and here. Definitely the bulls stepped in here, right? Because at one point this would have been a really big bearish candle. So this is really the first obvious point in time when you could say, okay, the bulls are there, but how hard are they fighting, right? So they did a pretty good job. They pushed it back up here because at one point this was a big, huge bearish candle. They forced price back up, but it's still closed bearish. Okay. But look at the volume. Now look at the volume of the next candle. Same amount of volume, right? Same amount of volume. I'm sorry, these two candles here, same amount of volume, right? You can see that down here. If you hover over this volume here is associated with this candle and this candle, right? So we already went over more bullish here than bearish, even though they're both bearish candles. Very next candle. Look at how the volume dropped off, but look at how big the body is here of this candle, right? So bigger body than here. There's not much buying pressure here. So it's almost like the bulls momentarily stepped out of the way and just let a handful of the bears just push price down. And I say handful because look at how the volume dropped off, right? So on a candle that has that kind of a body, that big body there, and there's not much buying pressure down below, but volume is dropped off, that just tells me there just weren't any buyers, right? That volume was just made up of sellers. And there didn't have to be as many, you know, because the volume on this candle was, let's see, 107,000. And here it was 178,000. Okay. All right. Next candle. We get down here. So bulls basically disappeared on this candle. Next candle comes in here and look how the volume picked up again, right? So you're getting a volume spike here from the previous candle. And then you get another nice lower wick here. So here's another attempt by the bulls, right? Yes, it's a bearish candle, but there's the indication there that the bulls are there. It's almost like, you know, they're testing the waters, right? Is it time to step in? Can they push the bears out of the way and can they move price higher? Well, doesn't happen, right? Because look at the next candle, right? Another big bodied bearish candle. But again, look at what happened. Volume dropped off. So it's like here, bulls stepped in and then they stepped away. Here, the bulls stepped in and then here they stepped away. And then all of a sudden, then what do you get? Next candle, right? So couple key things, right? So we're looking at a bullish setup here. So couple key things. Again, hammer candle, bottom of the move. Now it could be it could be a new low of day. It could be a double bottom. but I'm looking for a hammer at the bottom of the move with volume, and that's exactly what you get here, right? So look, and so if you look left, right, this volume here exceeded all the volume to the left except for the very first candle of the day, right? And again, I don't really look at the first candle of the day. So you get this volume spike right here with this hammer candle, and that's the exact setup I look for, right? Now, let's just take it one step further because I don't want to just rely on a single chart. Let's then go. So here's the 5-minute chart, right? So as I mentioned, I want to look at higher time frame. Well, at the time that this hammer candle came in, what do we have happening over here on the 15-minute chart? We have a hammer candle, right? That's great. The fact that we have a hammer candle on the 5-minute chart that we're looking to set up the trade, a hammer candle on the 15-minute chart, terrific. Let's just go one step further. Let's look at it on, here's the 30-minute and then 1 hour. Okay. 30-minute hammer candle. So there's my multi-time frame agreement. I've got a 5-minute chart, a 15-minute chart, a 30-minute chart showing me that this is a potential bounce spot. Okay. So I want to go back to now here over in the 1 hour. You're not going to see that yet, right? But I have 3 of my time frames showing me a potential for a bounce. So I'm going to go back to the 5-minute chart. Okay. 15-minute chart, 5-minute chart. So real quick, and Frank, especially you, any questions so far on what I've gone over? And again, at any point, feel free to put a question in the chat because I'm always looking at the chat. Okay, all good. Okay. Does it make sense to you so far? Perfect. Good. Cool. So here's a setup, right? 5-minute chart. I can just bracket this candle, right? Entry, stop. So a couple things. I never go a penny over the entry, right? My personal preference is I like to go 3 pennies over. I don't want to just get triggered after a penny. I'd like to see a little bit of a push, right? So 3 pennies, it's not much, right? So I would go 3 pennies over the high as my entry, and my stop is going to go down here, not right below it, but give it a little bit of room, right? Because when you're placing your stop, you don't want it to be too obvious. Like everybody's putting their stop right underneath here, right? You don't want to be everybody. You want to be a little bit farther because if price does come down here and just wicks down here just a little bit to trigger in all those orders and then go back up, you're safe, right? So give it a little room, but entry, stop, and then you go, okay, well, I need 3 things when I'm setting up my trade. I need my entry, I need my stop, and I need to look and see, do I have the real potential to hit a target with this trade? So I can't just set up the trade and take it. I need to set it up, and then I need to look and see, well, what is the possibility of hitting a target? Now, uh, again, Frank, I'm going to come back to you real quick. Do you have and you may not right now because that's fine because you're starting. Do you have a written trading plan? No. Okay, cool. I'm going to give me 2 seconds here. Bear with me and let me just pull up something real quick. Frank, this is going to be like one-on-one coaching for you today. Lucky guy. Yep. Let's see. Sorry, bear with me. I'm just trying to pull up a different account here real quick. Sorry. Give me just a second here. Bear with me. Trying to pull up a different YouTube account. Here we go. All right. Creating a trading plan workshop. Here's this is what I want. Okay, Frank. Sorry for this delay. In the chat, I just put a link. That is my YouTube channel, personal YouTube channel. So Frank, just what I do is so that I don't like add way too much stuff to the real life trading YouTube channel is I'll record these sessions I'm doing now. I'll put them up on my personal YouTube channel, and then I'll drop the link over in Slack that you can catch there. But if you go to that link that I just sent you, okay, I'm giving you some homework before the 90-day class starts. Okay. So I want you to be really successful when it comes to the 90-day class. So I want to give you some homework, which is watch this this video that I just sent to you. So it's almost 2 hours long. It's comprehensive video. It's creating a trading plan. It's a workshop that I did. You will get a lot of benefit out of it, and it will definitely help you going into the 90-day class. Okay. And you should definitely try to at least put together a preliminary plan before you start the class next week. All right. So back to this. So what I need to do is, per my plan, the reason I brought this up, Frank, is that my personal trading plan says that I can't take a trade unless I see an obvious 1.2, 1.4 R gain. Ideally, though, I want 2R, right? So I'm always looking for, ideally, I want to see is whatever trade I'm setting up, can I potentially get 2R out of it? So I need to look at my reward versus my risk and do some analysis there and decide, can I get at least 1.2, 1.4 out of it, or can I get 2R? Okay. So that's, and again, that's written right into my trading plan. So when I'm looking at this and I go, okay, well, where can I, if I'm getting this trade here, where can price go? And the problem a lot of traders make is the only thing you have to go off of here, right? When you're looking at just today's price action, the only thing that you have to go off of here is today's high, right? And that's just unrealistic to get back to now that's not to say it couldn't happen. Of course it could happen, but to set up this kind of a trade and go, well, to get back to the high of the day, unrealistic. So I could do a couple things. I can turn on my pre-market data and see if there's anything there that might help me out. Okay. So pre-market is this grayed out area here, right? So I could look at this and say, okay, here's the pre-market, but here's the pre-market low. Could I get back up to that? And let's just put a line there. I don't know. It's still aggressive, right? I look at that and go, that's pretty aggressive. Can that get from here away up near? And if it did, great. It's like 6R. Fantastic. 5R. I don't know what that is, but probably not going to happen. I could go over here and I could look and see, okay, well, here's a previous day, right? So here's yesterday's price action. Here's the pre-market from prior to yesterday. That's another potential area. And, coincidentally, look where price got to today. Okay. But again, not ideal, because this is, pre-market, this is the real price action yesterday, pre-market. So what I like to do is I would look at this and I would go, okay, I've got a couple levels pre-market wise I could use, certainly. But what else could I do? Well, I could go to my fib retracement. So, and Frank, if you're not familiar with Fibonacci retracements, it's fine. It's a tool to use to help identify levels that price could retrace back to. Okay. So if I click on my fib retracement and I just go from the high of the day today to the low, I'll put it out here. Okay. Excuse me. This shows me here, I've got 23.6%, 38.2%, 50%, 61.8. Okay. Those are my levels that I could look at as potential retracement areas. Now, coincidentally, well, before I say that, the key levels here, okay, and again, think of it as a zone. It's not a dedicated price level, but the 38.2 to 61.8, that is the sweet spot. Okay. So if I were to add a drawing here, $61.8, I said down to the 38.2, that is your buying zone. Okay. So I've identified that, right? There's my buying zone. And anywhere in this area here would be a realistic place for price to retrace to. Okay. So I could say, okay, at a minimum, price could retrace to 38.2. 61.8 would be nice as well, but somewhere in this range. And coincidentally, right? So I've already looked at the pre-market data and I've already identified from not this morning's pre-market data, but yesterday's pre-market. There's my red line that I dropped in here, right? That goes back to here. So coincidentally, where is that red line in relation to my fib retracement? 50%, right? Great way of just breaking things down and looking for a target based on information you already have, right? The pre-market stuff, as well as using a tool like the Fibonacci retracement. So that's a pretty good level, right? So I know that that is a level that I can work off of. And it also, it aligns with the pre-market data from a day ago. Now, I'll also drop in the price level at 38.2 right here, right? So there's 38.2. I know that that's 50, 61.8 is way up here, right? So, excuse me. So now what I want to do is I'm going to get rid of these, clean this up a little bit. I remove my fib retracement. I'm going to remove this. I can remove, this was my zone area, right? I threw in that drawing there just to have that zone. So now I know, and again, I'm not even in this trade yet, right? I'm just setting it up, but I know that if that's my entry, then I know that this level and this level are pretty good potential targets, right? So what I want to do now is I want to just go, okay, well, if I can target 38.2, what is that in terms of a gain, right? Off this? Well, and a lot of this will just come down to being able to do this quickly, just with an eyeball test. But if I'm looking at this, I'm looking and I go, that's probably 2.5 R is my guess, right? So if I go just throw this line on here like this, just as a gauge, if that's 1 R, and there's a 1 R gain, right? So my risk was 1 R. Let's see where we are. There's 2 R. So I know to this line is just over 2 R. Maybe that's like 2.25 R, something like that. So right there, I know that the setup that I have gives me my reward to risk that I need in order to take the trade, right? And again, I'm explaining this and it's taking a longer time to explain it than would actually happen in real time. I can do this quickly when I'm setting up a trade. But I know that this is a good target, right? And I know that that will give me my required reward to risk. So I can remove these drawings. So there's my setup. So now I have my entry, I have my stop, I need my target, right? Because I want to place an OCO bracket order. I want to have all 3 of those built into my order before I click submit. So I want my entry, I have to have my stop in place and I want my target. So I build my LCO order, I put it in there, and boom, I'm in the trade. Now, what I'm going to do, excuse me, is uh, the way I approach is I will throw out this target here, right? That's a realistic target. And I will say, okay, when I hit that target, I'm going to exit 90% of my position and I'm going to hold on to the additional 10% just in case it continues to run, right? But I'll lock in 90% of that gain at 2R or whatever that level is, 2.25R. And then I will just see if price can just keep going, right? And then I'll, and if price keeps running, then I'll just, bank a little bit of extra money. If it pulls back, then I'll maybe give up a tiny bit, but I do want to give it a chance to keep running if it can do that. So entry comes in here, boom, you get triggered in. I mean, that's a beautiful looking candle. Okay. So what I'm going to look to do is as soon as I can, okay, as soon as I can get a pretty good indication to move my stop to at least break even or slightly profitable, I'm going to do it. Okay. So I get triggered in. This first candle comes in and it's a really nice candle, decent close, a little bit of an upper wick for, selling pressure. And then you get some sideways action, right? So all that's happening here is this candle, this candle, this candle. Excuse me. This is just building up pressure. What I really want to see is I want to see a strong, convincing close above this candle. Because if you look here, the upper wick here and the upper wick here are pretty close, right? And the amount of wick here and the amount of wick here are relatively similar. So what I'm looking at is if I can get a strong close above this level, I'm going to move my stop. So that doesn't happen up until this candle here. So on that candle there, that's when I can move my stop because I've got the close above. This was the previous level that price was struggling to get back above. And you could see it struggled here, here and here. This was just building, these three candles was just building pressure. Then this candle comes in, it struggled to get above it. This candle came in, struggled to get above it, broke above it, and then closed down below, back down below it. So clearly this was the level that you needed price to close above for me and the way I trade in order to move my stop. And that happened here. So so Frank, what I'm also going to share with you here, and those who are in the room who are regulars know that this is my approach. As soon as I get the close that I'm looking for above a level, I'm going to implement what I refer to as a 5-minute 2-bar trailing stop. Now, what does that mean? Well, I'm going to start moving my stop based on every single candle. In this case, where I'm looking to go long, every single candle that gives me a higher high and a higher low, to the candle preceding it. Okay, so on this candle, so as soon as this candle comes in, I said I want to look to move my stop. Well, I'm going to count back 2 candles off of this one, 1, 2, and my stop now can go below this candle, right? So as soon as the important thing is I'm getting the close above the level that it struggled with. And that was a good close too, right? It's a nice looking candle, strong, little bit of an upper wick, but not much. So as soon as I get that, I can count back 2 candles because that's the start of this. Like this candle kicks off my ability to implement this trailing stop strategy. Count back 2 candles, 1, 2. Now my stop, which is all the way down here, can now go below this candle. Sorry, I'm going to blow this back up a little bit. So my stop can go below this candle here, right? Somewhere down here. I'm not going to, stick it right underneath it. And maybe if I want to play it safe because I don't want to, give up too much, maybe I just go below this candle, right? But technically I can go back 2 candles. So what have I done? Well, I've protected my capital first thing, right? Because now my stop, I'm actually in the money just a little bit, but I'm in the money now. I'm not looking at giving back anything at this point. It's a free trade. And there's nothing better than being in a free trade and having the pressure off you. Right. So big part of this game is dealing with the emotions. Right. And so if you can give yourself a free trade, take it. Right. At this point, if price reverses and it trails me out, I'm not losing money. I'm actually going to lock in a tiny little profit, a little bit of profit, but I can always get back in. Right. I don't have to just sit on the sidelines. I could, if it came back down here again, I can always get back into the trade. But so there's my stop. I'm now in the money, right, by a little bit. And then the next candle, what I'm looking for now is I need another higher high and a higher low compared to this candle. Well, I have to wait. Didn't happen here. It didn't happen here, but finally here it does happen. So in this candle, I get a higher high and a higher low compared to this candle. Remember, I have to stick with this candle until I get the higher high and higher low. And again, my target is here, right? I'm getting so close already. On this candle, I can move my stop back, count back 2 candles, 1, 2. Technically, my stop can be below this candle now. So I can take my stop, move it up here. Now, take a look at what I've done, right? Let's say, again, hypothetically, price reverses right now and it just waterfalls. What did I do? That's a 1 hour gain I just locked in. No matter what, I've got a 1 hour gain. So even if price reverses, takes me out of the trade, I just locked in an R just by moving my stop there. Well, next candle, boom, that hit my target, right? Now I've actually just locked in, right? Even though I moved my stop here to protect this and ensure I got 1 R, this candle right here hit my target and came back down, right? So it hit my target. Yeah, Andrew, works out great. And look, Andrew, back trade it, right? Go back and look for these setups. I'll show you. We'll have time. I'll show you more. Albert, I would have moved my stop after this candle right here. So because right here, this was all just sideways action, right? And it really wasn't doing it. It was this candle that allowed me to move my stop, because the key thing was getting a close above this level right here, right? So that was the right here was the level that price was battling against, right? Again, you got the high here, this one, right? Those candles. Yeah, so there's higher highs after that candle too. Yeah. So at this point, I'm not out of the trade. Keep in mind, I'm 90. I on this candle, it hit my target. Now I'm out 90% of the trade, right? So I'm still holding on to small amount of this trade, 10%, just 10% to see if it can do anything, right? So let's just see what happens. So here I'm 90% out of the trade. And on this candle, I can move my stop back 2 candles, 1, 2. Well, the low of this candle is actually higher than this one. So I'm going to just move my stop right here, right? Just going to use that low. Next candle comes in. So again, now I need a higher high and a higher low compared to this candle. Well, does not happen here, does not happen here, does not happen here. Finally here, you do get a higher high and a higher low. So now I'm going to count back 2, 1, 2. Well, I can't put my stop here because this has a lower low right here. So I'll just move it up, right? At this point, I'm okay with whatever happens because I know I'm only going to give back a tiny little bit depending on what happens here. But if it just runs for the rest of the day, I'll be in it. So now I need a higher high and a higher low compared to this candle. And then I wait, and then boom. Let's see. High of this, 68.52, and the high of this, 68.52. Okay. Dilemma. What do you do? It's technically not a higher high at this point, right? It's a same high. But I will say this. Once I've hit a target like this, it's a judgment call to me, right? If I've hit my target and I'm getting a higher high, I mean the same high here, that's an indication to me that price is struggling. So it's a judgment call. And at that point, I'm going to be a little more aggressive because I've already hit my target. So in this one, I would count back 2, 1, 2 here. And again, this candle has a lower low than this. So my stop is going to go right here now. Okay. Next candle, it makes a higher high, but it does not make a higher low. Can't do anything, right? Now, technically, let's just say technically, if I waited, let's say I didn't allow myself to move my stop on this candle because it was the same high as this one. I still need a higher high and a higher low compared to this one. Well, this candle here did actually give me that. So let's say if you had your own rule and you said, well, I couldn't, I'm really going to stick to the technical part of this strategy. And because this did not make a higher high, I'm not going to move my stop. Well, in this candle, this did give you a higher high and a higher low compared to this candle. At that point, you count back 2, 1, 2. Well, you're down below this candle anyway. And then what happens? Next candle, boom, probably out of the trade, right? Probably got taken out on this one. But that's okay because you're only giving back a little bit, right? 10% of, this move is nothing, right? So you get back a little bit, but at the same time, my target was like 2.25 R. I'm okay giving back a little bit if that gives me a chance to, make more if it does keep going in my direction, right? It's a really simple technique, but it works really well. All right. Albert says great trade. Yeah, no, that would have been a phenomenal. Now, I'm just full transparency here. This is not a trade I took. I found it. I've been working all day with RLT stuff. So I wasn't able to, I didn't even take a single trade today. I've been, doing with a lot of new year, end of year stuff. So anyway, but this is, a great setup, right? So just go back in your charts, right? It's just back trading. Go back in your charts, look for those kinds of setups. You'll see them over and over again. Let me see. And all I do when I'm looking for these setups is I will just kind of scan through charts and I'll just focus on down here. I'll just focus on the volume and look for volume spikes. So to give you an example, if I go to, here's another screen of mine, right? So this is the screen where I put up basically all the stocks I'm watching. Like I have the usual suspects that I watch every day, Nvidia, Tesla, Amazon, AMD. But I'll add 4 different ones down here depending on the day. And so if I'm looking for these kinds of setups just to back trade them, all I'm doing is I'm looking down below here. Before I'm not even looking at the candles themselves. I'm just looking for areas where I see volume spikes. And then I'm going to dive into it a little bit deeper to see, well, what did it look like, at the time? So for instance, here, PLTR, right? Look at these volume spikes and it happened right at the high of the day. So I would just go into PLTR. I would just go into PLTR here and I would look to see if I saw any kind of setup, right? And the reality is, yeah, volume spikes, but not the kind of stuff that actually meets my criteria. So, and what I mean by that is I'm not seeing let's go to a 3-minute. I'm not seeing this is a 5-minute chart. Here's a 15. I see the volume spikes, which is great. And that's kind of what I'm looking for to indicate that, we're looking for a reversal. And Frank, let me just mention, I think I failed to point this out. So why volume spikes, right? So what does that mean? Well, what that means, the volume spike indicates a potential point in time where it's not necessarily oversold, overbought, but it's capitulation. Okay, it is the bulls, right? If you get up here, right, and it's exhaustion buying, right here, right? Look how as this is running up here, look how the volume is increasing, and then right here at the top you get that volume spike, right? Again, I don't see that it didn't have the candle I'm looking for, but that's okay. Just still understanding the sentiment of the volume, which is that when you get really high volume at a higher or low, it can indicate, I'm saying can because it doesn't necessarily have to, right? It can indicate exhaustion buying at the top or exhaustion selling at the bottom. Okay. And that's really the importance of the volume spikes, right? And again, I use the word capitulation, right? Are the bulls giving up? Or down at the bottom, are the bears just giving up? So I don't see the price action. I mean, the candles that I would want to see here. Yeah, the volume's there. Let's just out of curiosity, let's look at a 3-minute chart. What happened on the 3-minute chart at the top? Did we see anything? And no. And that doesn't mean that the trade wouldn't work otherwise. It's just I have found for me that the hammers at the bottom of the move, the shooting stars at the top, those without a doubt, I will take those trades 10 out of 10 times, right? They're just so obvious to me. Let's see. Let's see if I can find another example. Yeah, let's just go through a couple these charts real quick, right? So the charts that I have down below that I just showed you a second ago, right? So NVIDIA, right? So if I zoom in here, right, I'm looking for the volume spikes, and I'm looking for again them associated with hammers at the bottom or shooting stars at the top. Okay, here, right here, right? So you don't see it through here, although you did get volume spikes, but right in here, dive into here, right here. Now, see the volume spike and see the longer. Now, that's a pretty big candle. Okay. So, in all fairness, I don't know that I would have taken that because it's a really, I mean, think about this. Your entry, well, let's just look at it. Let's analyze it. Okay. So, here at the top of the move, I'm seeing a shooting star, but that's a really kind of long candle there. I would, prefer it to look more, let's see, smaller one like this, maybe a little bit more of a body, but not as much of an upper wick. Because think about the wick just creates a much larger delta between your entry and your stop. But let's just look at this. Let's just analyze it, right? So let's say I saw this and I see this volume again. The key thing is look at that volume spike. Look at all the volume immediately to the left of it. The volume preceding it. There's your spike, and it's a shooting star. So if I throw in my entry here, stop up here, right? Would have to look at this and say, okay, well, realistically, what's my target, right? Where can I get back to? And let me do this because at this point, right, I only have this data here to work off of, right? So and so at this point, I kind of have to look at pivots, right? What are the pivots that I'm really looking at? I've got a pivot here. I've got a pivot here. I've got a pivot here, right? I could look at those levels as potential. So I could drop in a price level, let's see, maybe I'm just kind of looking for an area that would be realistic that is kind of in between all of them, right? Maybe something like that. You have this high, you have this pivot, and then you have these down here. Again, I don't know that I would necessarily want to try to, think that's going to get all the way down there. Then there's one way to look at it. Then the other way is just to look at isolate this move here, right? From here to here and throw in your fib retracement. Okay. And based on my fib retracement, I got to flip that around. Okay. So based on my fib retracement, right, I said 61.8, right, was like 38.2 to 61.8. Well, this line that I just drew there is pretty much at that 61.8, which would be like the farthest that I would try to target, right? So, could I get there? Okay, but then I got to go back to my rule. Okay, so let me drop a line there. So 61.8 is there, 50% is here, 38.2 is right here. Right? Let me remove fibs. Okay. So here are my targets: 38.2, 50, 61.8. Look at, again, I start up by saying, look how big the wick is on this candle. Right. So going back to what I talked about at the very beginning of this, about when I give trades a grade, this would be a C or maybe a D, right? It's not great, because if I look at this, I go, here's my entry and my stop, right? There's my risk right there. If I bring this down here, here's 1R. 1R is I have to get beyond that 50% retracement to get to 1R. And I already said that I need a minimum of 1.2 to 1.4. And then the next level down here is a 61.8. Right. So when I look at that, I go, okay, well, it's not a great reward to risk setup. Okay. And take it one step further, just giving you just another thing you can do just to kind of either judge whether it's a good trade or whether it's something you should pass on, is you can also throw on a trend line here, right? So we have, if we go back to here was the most recent low, this pivot low, and we had another pivot here. So if you throw on the trend line, you know that in order for this trade to work, that trend line's got to get broken, right? So it got broken, but it took a while. And then look where price bounced. It got basically down this kind of goldish yellow line here is VWAP. It came right back down into this pivot, basically, right? You can see that this level and this level, double bottom right here based on the pivot. And then it bounced out of there, right? So, excuse me. So, and when I'm analyzing a trade, I looked at it and say, okay, well, it meets my criteria. There's the shooting star I'm looking for. There's a volume spike. But then I have to look at the risk reward and go, does it make sense? And in this case, I would have passed. Purely just would have passed, just because it's not a great setup. Is it a setup? Yes. Is it a great setup? No, it's not a great setup. It's like I said, it's a D. It's so I look at that and I go, that's just too much of a, between my entry and my stop, I'm asking the stock to do too much to hit a decent level, a realistic level. So I would have passed on that trade. So again, just a way to look and evaluate and just back trade this stuff, and then look and see if it makes sense, right? Don't just go, okay, well, there's a setup, I would take it, right? Does the setup make sense? And then you can just, you can keep, just keep pulling up tickers and looking for those kinds of again, if you want to look for these kinds of setups, now the hammers, the shooting stars. Let's look. AMD, I got well, one more minute, but let's see. AMD, I saw. Okay, so you got some, but see, you're not seeing any volume. Like I was looking at AMD on the 5-minute. I was trying to see if there was anything there that 5-minute wise, if you got this hammer again, but look at how long that body, I'm not the body, the wick is of that hammer, right? If it was shorter, okay, that might make more sense. But look how long that is. right? So I'm going to pass on something like that just because it's creating too great of you're asking the stock to do too much, right? And even if you were to have bracketed this just to throw in some lines just to see. Well, there's Mr. Newsom. All right. My time is up. The master is here.
What's up, buddy?
How are you? I feel like I
Doing
haven't
great.
seen you all day.
Yeah. It's been so many minutes, man.
Yes. Yes, sir.
So many minutes. Good seeing you, brother. Thanks for holding down the
Yeah,
fort for me.
my pleasure. My pleasure. We're doing some nice analysis on price action and